Thank you, Francisco. So now we're going to be moving on to debt ratios. Debt ratios show a company's overhead, a company's debt compared to its assets, or maybe compared to its owner's equity. It just shows total liabilities of the company compared to perhaps just cash flow assets in general. These debt ratios, to give a quick synopsis or summary, the higher the ratio, the more unfavorable it is for the company and just the more risk it shows for the company, which tends to be the case for Norwegian Cruise Lines. Our total debt ratio is 0.69 compared to industry average 0.39. This is showing way above industry average. This is showing weakness for the company. This is showing a lot of risk for the company. This just does not show much upside or growth for the year. One positive thing I wish I could show you, I do not have a screen with me, is through the quarters, quarter 1, quarter 2, quarter 3, quarter 4, the debt ratio, total debt ratio, was actually decreasing throughout. The annual ratio is 0.69, but we started off our first quarter with a debt ratio in the high 0.7s. Slowly moving down to the low 0.6s by the end of quarter 4, we kind of saw a slow downtrend in their debt ratio, which does show some promising good cash flow behavior for the company. Moving on to next types of ratios is our profitability ratios. These ratios kind of work opposite than debt ratios. The higher these ratios are, the better it looks for the company, the more favorable. Our main profitability ratio, our return on assets ratio, is net income over average total assets. This profitability ratio for Norwegian Cruise Lines is 0.03. 0.03 is actually a little bit less than industry standard or our closest competitor. It's about half. Nonetheless, it still shows promising growth for the company. Like the debt ratio that was kind of downtrending, this one through all the quarters was uptrending a little bit. So that just shows a little bit better cash flow management throughout the separate quarters. One of my favorite profitability ratios is actually the profit margin ratio, which tends to be our strongest for Norwegian Cruise Lines. Net income over total sales, 0.10 is the ratio. So that means about 10% of our total sales is our net income. I feel this to be somewhat strong for the company, especially compared to industry average, 0.15. Of course, yes, it still is below industry average and our closest competitors, but it still shows a lot of strength for the company to be 10% your net income of your total sales. Really good sign for Norwegian Cruise Lines. And like the debt ratio that was downtrending, like our return on assets that was uptrending through the 4 quarters, our profit margin was also uptrending through all 4 quarters, starting in quarter 1 in 0.06, 0.07, moving its way through all the quarters up to 0.10. This just shows great promise and great growth for Norwegian Cruise Lines. And this is probably something that our SWOT analysis with Loe and Sam will be able to tell you next. Thank you so much.